We all know the legacy of apartheid in this country and the disparities it's created in South African education. Consequently, many young South Africans are not able to go to school because they can't afford it. And then even when they get there, their aptitude levels. So it's a two-pronged approach that's needed here. How can the Fundisa Fund help?
Good morning, Lerato. I think the idea was a joint venture between the industry and the Department of Education. And between the two bodies, they put in what we call 32 million rands worth of seed money. How it works is that anybody wishing to save for a potential learner for tertiary education has to make a minimum investment of 40 rand per month. On that, there is then a subsidy up to a maximum of 600 per annum, which means if somebody saves 200 per month, then they get the full 600 subsidy, which together with the return on the fund gives you a return of approximately 35% per annum, which quite clearly is way ahead of the inflation rate.
All right, let's talk about the collaboration between asset management companies such as Coronation Investment, Old Mutual, Stanlib, with the government. How has the deal been structured? How is the fund set up? Who bears the greatest cost and the greatest risk?
Okay, firstly, the Fundisa project was set up between the asset managers, as you've mentioned, the industry and government. There's a review board which watches over everything that is done, and that comes from the Department of Education, NSFAS, the National Student Financial Aid Scheme, and the industry. The administration is managed by Stanlib, and then there are 3 underlying funds offered by Ned Group Investments, ABSA, and Standard, in which the investments can be made. The money that is saved for the learner and will only be disbursed when the learner goes to a recognized government tertiary institution to study further.
All right, and government's contribution?
Well, through the Department of Education, they put in 20 million and the industry put in approximately 12 million.
Okay, now how does this differ to other existing bursary schemes or financial aid models? Shouldn't you just be working through the existing network of financing education as opposed to coming up with a fund?
This is complementary to what is already there, and that's why we're working with the Department of Education and NSFAS. And it's more than just a bursary. It in actual fact pays for the learner's education, which is funded A, from the investment that is made, and B, from the subsidy that is paid out of the money that was put in by the industry and government.
All right, now we know that on average tuition at a South African university is somewhere in the region of 25,000 rands per learner. That's before we talk about boarding, books and extramural activities. That's in 2010 figures. 10 years from now, when parents start to draw money from this fund, what sort of costs are we looking at for education in South Africa? And is that 40 rands minimum investment going to be sufficient?
I would hazard a guess that the two things one must look at, it's very difficult to forecast what education will cost in 10 years' time. But let's make a basic assumption it escalates more or less in line or slightly higher than the inflation rate. Currently, the income fund that is being used, because it's pretty safe, generated after costs a return of about 9.5% last year. And if one adds the subsidy, which is 25% of whatever is contributed, up to a maximum of 200 per month, it gives you a return of about 34 odd percent, which is far more than the inflation rate and should at the very least contribute to some form of basis to pay for the learner's education at the start of year 1.
All right, now just talk to us briefly, Leon, about when is the right time to start investing. Reports suggest that if you really want to get a maximum value for money, you should start when your child is about 3 years old.
I would think the sooner you start, obviously, the better, because you get the benefit of compounding. You get the benefit of the return not only on your contribution but also on the subsidy. So the earlier you start, the bigger the impact. And I just want to point out, you know, it doesn't have to be just the parent. It can be anybody who wishes to assist. The key is that it's for the learner, and it will never be paid out in cash, but will be paid to the institution where the learner goes to study.
What happens if you have a recalcitrant child who wakes up and tells you that they want to be Bill Gates? They don't want to go to university, they've got an IT mind, and they're not doing this education thing.
Quite clearly, it can pay for any recognized government institution, whether that be university or Technicon, etc. So if you want to study IT at a tech, it will pay for that too.
All right, and just give us your views on the current debate around financial aid. We know that an investigation was commissioned by the Department of Higher Education. A report was then drafted by Professor Marcus Balintulo, and basically the feeling is that financial aid in South Africa is insufficient because it doesn't take cognizance of the working class communities in South Africa, many of whom are the actual people who are sending their children to school, and that we shouldn't just be targeting poor households, we should be targeting the working class South Africans who don't have sufficient enough cash flow to be sending their kids to school but do have a job. What kind of concessions are there for the working class in this context?
Well, I would hazard a guess that in the context of schooling, technically most schools are free unless you go to a private school, or it's voluntary to pay. And I think old boys networks and donors should help and assist the schools. In terms of tertiary education, quite clearly additional financial aid is quite clearly needed at varsity. Fundisa is one of those projects which assists in that, we hope. But I think also counterbalance to that is that you cannot just put in financial aid if the students don't do their work. And I think the dropout rate at varsity is far too high.